Today, Bitcoin holds steady after last week's sell-off. At the same time, Vitalik Buterin moves $1 million in ETH onto Coinbase. And PitchBook's Robert Lay breaks down the findings of the research firm's second quarter crypto report. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The crypto market was lower to start the week after a big drop in the price of Bitcoin on Friday. That cryptocurrency was flat as of noon Eastern today after it posted its worst week since November. It was hovering below the $26,000 mark. Ether, meanwhile, was down by more than 1% at about $16.50. We'll talk more about that shortly. However, other coins were making bigger moves to the downside as they continue to grapple with low liquidity and thinner volumes. Ripple's XRP slid 5%, while the coins tied to Ethereum competitors, Polygon and Solana, slid by about 4%. Cardano's ADA token fell 3%. Okay, let's talk about the top stories. FTX debtors just overhauled a proposed settlement in order to address concerns raised by a U.S. trustee. In a court filing on Sunday, the debtors said that the trustee seeks to inject itself into a routine settlement process, but the group of debtors still made changes to address the objections. For one, the new settlement reduces the maximum settled value for covered claims from $10 million to $7 million. The debtors will also submit monthly reports on any claims that have been executed as part of the settlement. Next, Vitalik Buterin is moving hundreds of Ether amid the latest sell-off. According to data from Etherscan, he moved 600 ETH, worth about $1 million, onto Coinbase's exchange. His reasoning for the transfer isn't clear, but analysts often watch the flow of crypto onto exchanges. It's a sign of rising market activity and indicates an investor could be preparing to sell. Finally, China reportedly wants to use its controversial social credit system in the metaverse. According to a report from Politico, the country's telecom giant China Mobile has proposed a digital identity system for users in virtual worlds like the metaverse. The identifiers would include social characteristics, occupation, and other identifiable signs. The proposal even reportedly includes an example of how the identification system could track someone who spreads rumors and causes chaos in the metaverse, so police could identify and punish them. China's social credit system has been the subject of criticism and misconception since its launch in the 2010s. The program has largely been used between businesses and in the hopes of sharing data like credit scores. But China's implementation has also been pretty vague. The country has said the social credit system helps track social creditworthiness, which some have argued could be used to restrict individual freedoms. All right, for our main story, PitchBook's quarterly crypto report came out today, highlighting VC trends and emerging opportunities in the second quarter. Crypto World's Talia Kaplan caught up with the man behind the report, PitchBook crypto analyst Robert Lay, to discuss the findings.
Your latest crypto report noted that in the second quarter, crypto companies around the world raised $2.3 billion in venture capital across 371 investment rounds, and that represents a nearly 15% drop in quarter-over-quarter deal value and a more than 16% decrease in the number of deals. The report points out that this was the lowest amount of capital invested in deals completed since the fourth quarter of 2020. It also was the fifth quarter in a row of declining investment activity. Was this at all a surprise to you? I mean, I know in previous conversations we had, you said that you believed crypto will continue to drop in the first half of the year in line with what we're seeing in your new report. But do you think the trajectory will change course in the second half of the year like you had previously forecasted?
Yeah, so like we've been speaking throughout this year, Talia, I said that, investors have been focused elsewhere, AI, other areas of tech, but also, the crypto markets is still pretty challenged. And so we expected to see a decline in deal value throughout the first half of this year. Now, to answer your question, do we think that's going to turn around? And our answer, and we said this at the beginning of this year, is that we expect in the second half of 2023 is when we're going to start seeing an uptick in VC investments. And we still do expect that. And based on our conversations with investors, they've just been slowing down their investment pace, but they have been having conversations with a lot of different companies, a lot of different founders, and a lot of different teams to really understand what is being built out there. And now they're starting to get comfortable in understanding what the opportunities are out there. And so we do think that investors will become more comfortable later this year after having all those conversations. And also, we've spoken about this many times in the past, there's just a lot of dry powder out there for crypto VC funds. Last year, they raised over $25 billion, and that capital has to be deployed in the next 2 to 4 years. And it's been about a year already into them closing those funds. So they don't have a lot of time to deploy that capital. So we expect them to start doing that later this year.
Expanding on that, the report also points out that over the past few years, VC crypto investments have correlated with crypto asset prices with a lag of about 3 to 6 months. The report states that if crypto prices continue to move higher, then PitchBook believes VC investments could rise in the second half of 2023. But now that we saw crypto prices slide dramatically, is that what you're still forecasting? I mean, Bitcoin just experienced its biggest one-day drop since November of last year when FTX collapsed.
Yeah, so I don't think it correlates on a day-to-day basis really with I think you look at it over a longer period of time. Overall, the crypto asset class has been up this year. And so I think that correlation is you're going to see it hit the private markets in the next few months. And, we've been tracking this since probably like 2020. Historically, there wasn't really a correlation, but now because crypto is a pretty big it's an industry almost now, right? So there is a tighter correlation between what the public prices are and what VC investments are looking like. And you see this in traditional venture markets as well. The general tech sector, there's a correlation to overall VC investments. We saw tech last year had a very strong decline in 2022 in the public markets. And then there was also a decline in VC investments overall in 2022. And so in the crypto markets, you're going to see the same thing as well. And overall, Bitcoin, Ethereum, a lot of the large crypto asset prices are up this year. And we think that's going to carry over into the private markets later this year.
It certainly will be interesting to follow those developments. But your report says that blockchain infrastructure continued to attract the largest investments. Why do you think that is? And can you provide some examples?
Yeah, and this is kind of the common theme that we've been speaking about throughout this year is that, the underlying core. So we look at infrastructure under two buckets. You have the underlying core infrastructure. So you're looking at, the blockchains, the layer ones, the L2 scaling solutions, and those bridges and interoperable protocols. That is still fairly immature if you really think about it, because you look at how much even back in 2021, in May 2021, when we had very high usage on Ethereum, transaction fees were $10, $20, $30, $40, or even higher, a couple $100. And that's just not sustainable. So we still need the underlying core infrastructure to mature. And then also like the middleware infrastructure. So you can think about developer and enablement platforms or security and compliance or custodians or a node and validated infrastructure providers. All of that is being developed too. So investors see that as the main opportunity right now is to get the infrastructure mature before, if we have a bull market or when there are a lot of users that come into the space in the future, we have to be able to have the infrastructure to support that. And once that becomes mature, you're going to start seeing the application layer being built on top. And a good example of this is you look at cloud and mobile computing, right? That was the core infrastructure that had to mature before you can have an Uber and an Airbnb or any of those applications that came later. And so you're going to see this similar development here in the crypto ecosystem. And so a lot of investments are coming into the core infrastructure to make sure that matures, but before later the applications can come and be built on top of it.
That makes sense. Thank you for that clear analogy. But the report outlines some of the mega rounds of the quarter, one of which WorldCoin's $115 million Series C funding round. What do you make of that funding round, and what do you think it signifies, especially amid the backdrop of an overall decline in investment activity?
It's hard to look at that single deal and says it signifies much about the crypto space. I think it helps to have Sam Altman as one of the co-founders, which you probably know is the co-founder of OpenAI as well. So I think that really helps. They are building something that, and we've published research about DePIN, decentralized physical infrastructure networks, and we classify WorldCoin as in that category as well, where you're using blockchain ecosystems to build out real world hardware or real world infrastructure. And as the audience, they don't know, WorldCoin, they have built out this orb to be able to scan irises to be able to identify a single person and being able to use the identity for a bunch of different use cases online. And So I think the deal itself is large, and it's unexpected because they do operate in the crypto space. But I think mostly just because they're building something that's unique, and there's going to be a lot of use cases for their infrastructure that they're building out, and then they have a very good founding team.
What would you say are some of the main takeaways of the report?
I think for the quarter, there were some really good developments, and there were also some challenges. And so it was a little bit of a mixed bag for the quarter. The biggest challenges is regulations continue to come into the space, whether it's regulators coming after Coinbase and Binance, or a bunch of different failures are still happening as well. We saw Prime Trust, which was a Nevada regulated trust company. They went under. So I think there's some of those challenges, but there's also some opportunities that we see in the space.
And Robert Lay goes into great detail to explain those opportunities. You'll be able to check out his full interview at cnbc.com/cryptoworld. Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.